Friends, Hiren, are you with me? Hello, friends. Uh, are you getting me, Hiren?
Yes, sir. You are audible.
Okay. Okay. Hiren, um, एक second. We are recording this and welcome, friends, to this Zoom workshop on recent updates in GST. CA Hiren is a very renowned faculty on the subject of GST. He is very powerful, young, dynamic, and today he is going to talk on this subject, and there would be a question answer session later on. So anybody wants to ask me a question can chat me and we will answer through chat or later on this other way. And I am past president of ISACA chapter Ahmedabad. We had been focusing on delivering a different talk on different subject, and we've been very successful in organizing the seminar every week, and it is a marathon effort on our part. And because of this Zoom, it has become very easy for us to take a lectures. And after this, we put this on YouTube. Many are able to take advantage, and it is Hiren will answer online, offline, whenever you want any question. We would be ready to support you. With this short introduction, I hand over the mic to Hiren. Thank you very much. Take your charge, Hiren. I'm with you.
First of all, at the outset, I would like to thank Nitin sir for providing me this opportunity to deliver the session on GST recent updates. Sir, just one request. Can anyone allow to admit the other members also, or else I have to allow them to,
No, I am admitting. Now I will keep it open
Okay.
for everyone.
Okay, fine.
Okay.
So today's topic is not on recent amendment that is pronounced within 1 week or 1 month. I have tried to cover certain important aspects which I think which is more relevant for day-to-day practitioners who are even occasionally engaged in compliance of GST or managing GST. So certain circulars and certain updates I have covered, which are pronounced in 2018-19 also and 2019-20 also. Together with that, I have amply covered recent GST amendment, which is going to have effect from 1st January 2022. So first, before starting, if one look at the trend in GST revenue, that is the revenue collection month on a month basis, we can very well see that 1.30 is now an average revenue collection. Earlier, which was used to around 1.10 only. So because of there are certain provisions like enforcement of e-way bill, strict provision of e-way bill compliance, and together with the invoice, these are the provisions which gives the hike in GST revenue. So we can see that there is a definitely increasing trend in GST revenue because of certain compliance and certain new introduced provision by government. We will see that provision as well. But broadly, if I would say that I would cover certain rate changes amendment, what are the changes in GSTR 99C and what is the new date? Then recent amendment with respect to supply. What is the change in supply definition, which is the hardcore base of GST? Then it will be what is the change in claiming the input tax credit. Very hue and cry as far as this GSTR 2 and 2B is concerned. We all know that with the introduction of new GSTR 2 and 2B, one would definitely have to take a pause before taking any input tax credit. And what are the changes that has been effective from 1st January 2022? Together with that, what are the certain compliance related changes that is going to have impact? Some of you might be aware, some of you might not aware. So I have tried to cover. And there is a major change as far as the penal provision in e-way bills are concerned. So such kind of penal provisions are introduced with effect from 1st January 2022. And I would say that is the major changes as far as e-way bill compliances are concerned. Then certain circulars which are having impact on export as well as refund, and there are other circulars which are pronounced. Together with that, at the last, I have also tried to cover certain aspect which you should consider if you are looking for the health checkup of your client as far as GST perspective, or if you are going to, in summarize, I would say if you are going to review that, let's say one of the client gives you an assignment to check whether their GST compliance is at par, if there is not any prospective liability so far as the transaction has been carried out by the company, then how can you check? And at the last, we will definitely take question and answer session. With this, we will start with the first change, that is the rate rationalization. We all know that from 1st January, major two sector, which is textile and footwear, is going to hit. But due to various pressure of various textile association, they postponed the rate changes as far as the textiles are concerned. But footwear, they have already amended the rate. Footwear and textile both needs to be have rate rationalization to avoid inverted duty structure, because major inputs of these industries are at 12% and 18%. However, their output supply is at 5%. So there is huge accumulation of input tax credit, and government thought of to rationalize the GST rates. But textile associations at all over India has opposed this rate change because of one of the reasons, the COVID impact, because the industry is already hit by the COVID impact. Together with that, when there is a rate change, ultimately the costing of the product increase, and there will be a huge increase in the price if they change 5% to 12%. Together with that, I would also like to highlight one of the change from 1st October. There are many changes from 1st October 2021 also. But together, in that particular rate changes, one of the rate changes, solar power. Solar power projects are one of the segment where there is a rate change from 5% to 12%. Already such kind of solar power projects are taxed at 70-30 ratio. That is 70% component will be called goods and 30% component will be called service. New rate would be applied accordingly. If one wants to verify or see that what are the rate changes from 1st October 2021, then any rate changes would definitely be covered under rate notification. But there are clarification also in circular 163 that certain items where the rates are changed and how the scope of particular changes is widened or shortened, one can verify the circular 163 for the same. Next, we all know that immediate compliance in GST, that is called GSTR 9 and 9C. The due date for filing GSTR 9 and 9C for the financial year 2021 was 31st December, which was extended to 28th February. I am not supposed to highlight, but for your reference, I am highlighting that below 2 crores, you are not supposed to file GSTR 9 and 9C. If your aggregate turnover is between 2 crore to 5 crore, then you can file only GSTR 9 because 9C requirement is above 5 crores. But major issue that GSTR 9 and 9C is having for particularly financial year 2021 is that only when you are providing the input tax credit details, earlier you are not supposed to provide the details of input tax credit component, nature of input tax credit, whether that input tax credit is input service or capital goods. But now you are compulsorily required to mention that input tax credit that you are claiming is capital goods or input service. If you do not have the breakup of input and input service, you can merge in the table of inputs only. But for capital goods, you are supposed to provide the breakup. Next point which I would like to highlight for 9 and 9C is that when you are filing GSTR 9 and 9C for financial year 2021, you should consider the adjustment of financial year 1920, because certain adjustment of 1920 you might have reported in GSTR 3B of 2021. So you need to exclude such kind of transaction. Whereas for financial year 2021 transaction, you might have reported in GSTR 3B of 2021. So when you all must be knowing that the form, the way the form is prepared for GSTR 9, table 10, 11, 12, and 13, which is called Part 5 transaction. That Part 5 transactions are provided to report the transactions of current year, but you have reported in subsequent financial year. So whenever you report any transactions of 2021 in 21-22, then you need to report such kind of transaction in that Part 5 transaction. But please mark my word, whenever you are reporting any transaction in Part 5 transaction, that is current year transaction you reported in subsequent financial year, interest liability one should check whether my liability for 2021 I am reporting in 21-22. So have I paid the interest on it? If not, then department is asking. We will see certain notices that are being coming right now in later slide. And one point that would I like to highlight is table 8A. General table 8A of GSTR 9 is nothing but, in common sense, it will be called GSTR two-way reconciliation. So I can come up, I am also coming across certain kind of such kind of clients who are not following the GSTR two-way reconciliation. But here, even though you have not followed GSTR two-way reconciliation while filing your monthly GST returns, at the time of annual return, you are supposed to carry out this exercise. Next, one of the important changes. We all know the concept of mutuality. Concept of mutuality is nothing but a transaction between individuals, club, association, and its members. We have Supreme Court judgment of Calcutta Club, where it was clearly mentioned that club and association and its members are not the distinct person. They are the same. One can apply any goods or services to oneself. We can see that whenever, let's say, if Rajpath Club, I am member of Rajpath Club, and I am Rajpath Club is providing any service to me, then ultimately is an association of individual like me. And it was well established principle that it was a concept of mutuality, wherein member cannot supply service or goods to member himself. So there was no levy of service tax in service tax era. GST, the concept remains the same. But since in GST there is no such pronouncement, dilemma was created whether GST is leviable or not. Because in service tax, the requirement is that there must be two separate persons. However, in GST, there is no such kind of requirement per se. We can see that we are supplying the goods to our branch itself. By legal pronouncement in GST, my branch is called distinct person and I'm supposed to charge GST. With the same logic, whether the same principle holds goods in GST or not, that is a big question. To remove these conflicts, there is amendment in supply definition itself in GST with retrospective effect from 1st July 2017. And 71AA is added in the supply definition, which says that activity or transaction by a person other than individual to its member or constituents or vice versa for cash deferred payment or other valuable consideration is also called supply. Now, its introduction, they have also added the explanation to remove any conflicts that may arise because of certain judgments of Honorable High Court or Supreme Court. It says that for the purpose of this clause, it is clarified that notwithstanding anything contained in another law for the time being in force or any judgment or decree or order of any court, the person and member or constituents shall be deemed to be two separate persons, and the supply activity or transaction shall be deemed to takes place from one person to another person. So now the concept of mutuality is no longer valid. Club and association need to charge GST, and this transaction is very well covered under the definition of supply. This change is effective from 1st January 2022. However, the effective levy of this is from retrospective effect from the inception of GST, that is July 2017 itself. Now, this is the I would say the highly debatable issue. Before claiming input tax credit in my GSTR 3B, should I require to match GSTR 2A or 2B? First of all, most of you must be knowing, but for your clarity, I would clarify that GSTR 2A is not static. GSTR 2A keeps on changing based on the return filed by your supplier. However, you are supposed to claim input tax credit on particular date on, provided that means your supplier must have filed within due date. Then only you can claim input tax credit. If your supplier has filed their GSTR 1 belated, then for that particular transaction, you can claim input tax credit, but that is in the subsequent month. And to identify such kind of transactions, which are input tax credit filed based on your supplier's GSTR 1 filing within due date, they introduce GSTR 2B. Earlier, we all know that GSTR 2A, because of non-regularity of your supplier filing their GSTR 1, margin of 20% will be provided. That margin of 20% will be reduced to 10%, and then later on from 1st January 2020, it was reduced to 5%. But these all 10%, 12%, 15, 10%, 20% or 5% has been provided in the rules itself, rule called 36(4). There is no provision in GST Act, and one would say that there is no provision in GST Act and rule cannot override the Act. Hence, we are not following matching of GSTR 2B, and we will claim input tax credit based on our books of account only. To remove this ambiguity, section 16(2), which is the condition for claiming input tax credit, has been amended by introducing one new clause, section 16(2)AA, which says that details of invoice or debit note referred to in clause A, that is transaction on which you are claiming the input tax credit, has been furnished by your supplier in statement of outward supply, that is GSTR1, and such details have been communicated to the recipient of such invoices in the manner specified in section 37. So it says that, in summary, I would say you would be eligible to claim input tax credit only if such input tax credit is reflected in your GSTR 2B. Otherwise, you would not. Now, this provision is coming into effect from 1st January 2022. My question is, what if I am claiming the input tax credit of December 21 invoices, but I am claiming that input tax credit while filing my GSTR 3B for the month of December 21, that is sitting in January 22. Whether this amended provision is also applicable in December GSTR 3B? I left this question to you and we will discuss on a later part. Certain compliance related changes. If you are aware that if you are filing your GSTR1 and your customer GSTN number of your customer is suspended, then while filing GSTR1, error will be thrown and it says that this GSTN is suspended, so you cannot upload the invoices. However, I have supplied the goods to him. I have already paid the tax. So to remove the conflicts between GSTR1 and 3B, because in GSTR 3B I'm supposed to pay the tax, but in GSTR1 it says that you cannot add such kind of transaction because the GST number of your customer is suspended and you need to report either in B2C. This validation has been removed. Now, even if your customer's GSTN is suspended, you can very well upload your GSTR1. This provision is very draconian provision. 17(5)(12). Generally, the direct recovery power has been passed on, vested with the proper officer. It says that notwithstanding anything contained in 73-74, where any amount is self-assessed in accordance with the return furnished under 39 remain unpaid, that is GSTR 3B, either wholly or partly, and any amount of interest payable thereon shall remain unpaid, the same shall be recovered under section 79. Now the explanation has been added. It says that for the subsection, self-assessed tax includes tax payable in respect of the details of outward supply furnished under section 37, that is GSTR1, but not included in the return furnished under section 39, that is GSTR 3B. So if I summarize this provision, it says that certain transactions has been reported in GSTR1, but the same is not reported in GSTR 3B, then officer may initiate the recovery proceeding saying that the amount that is self-assessed but you have not paid. To stop the misuse of this power vested upon the officer, instruction number 1/2022 on 7 January 22 has been issued. It says that though there may be a difference between GSTR1 and GSTR 3B, because of the reporting mistake while filing monthly return. So opportunity must be provided to taxpayer to justify their stand. It may possible that I might have not reported certain invoices in my GSTR1 last month, and I am reporting the same in current month. So there may be a difference in GSTR1 versus GSTR3B. So it only says that the opportunity should be provided, and then only you can have a recovery proceeding. Earlier, even if you have not filed preceding 2 months GSTR3B, you can file your GSTR1. Now with effect from 1st January 2022, you are not allowed to file GSTR1 in case your GSTR3B for the preceding month is pending. So those who are yet to file their GST returns, please do it, because you cannot file subsequent return if you are not filed earlier one. Now, provision related to attachment of property or bank account. Section 83 says that earlier Section 83 comes into play only during the pendency of any specific proceeding, and that too of assessment, inspection, search and seizure. Now, changes has been made from 1st January 2022, and it says that it is not necessary that specific proceedings should be pending even after the initiation of proceeding also, and that includes demand and recovery proceeding, including the summons. He can provisionally attach the property, including the bank account, belonging to any taxable person. And furthermore, it also says that he can also attach property or bank account of any person on whose instruction such transactions are carried out. So it is not necessary that attachment should be of beneficiary only. Even on person on whose instance such fake invoicing transaction has been carried out, that person, such kind of person may also be liable for provisional attachment. Now, generally what happens that in case your case has been adjudicated by any officer, then on payment of certain penalty as prescribed under so and so section, you are done away with that proceeding and you are no longer liable to prosecute for that particular matter. Now they have special focus on e-way bill violation, and just to remove the fake invoicing and such kind of malpractice, they have delinked the e-way bill violation provision from the general proceeding. Earlier, it was mentioned that even if you are having any pending proceeding, then if you pay certain penalty amount as prescribed under the law, then section 120 to 125, and together with that 129, 130, which is the e-way bill provision, deemed to be have been concluded. Now they removed section 129 and 130. So in summarize, if I would have to summarize, then even though any other proceeding is continue together with e-way bill proceeding, then on payment of certain penalty, your other proceeding may be concluded. But for e-way bill violation, section 129 and 130 is having their own provision separately from other provision. So there 129 and 130 penalty together with other consequences continues. We all are must be facing this issue. GST tribunal is yet not functioning. Whenever I am moving my goods, let's say I am belong to Gujarat and I am moving my goods to Maharashtra. In between, on the moment, let's say in Maharashtra itself, conveyance get caught. And even though I am having my genuine transaction, the officer wants to impose the penalty. Unfortunately, particularly for e-way bill, particularly these penal provision are so stringent that I am having no other option except to appeal. I am sharing one recent cases of mine wherein just because of the classification issue, I have, during my conveyance, I have moved the goods of promotional material, that is the booklet of my business product, showing the various types of the goods in which I am dealing. I have supplied the goods, such kind of promotional material, to my another branch. But during the course of this conveyance, they have caught this vehicle and saying that this is not the promotional material, it is called a diary. And since you have charged 12% on such promotional material, considering the item XYZ, I consider this item as ABC, and I would like to impose the penalty. Then I am saying that this is the classification issue, views can be differ, but I am having no other option except to pay the penalty. Now, earlier, I am required to pay 10% of the tax dispute now to go in appeal. Now, together with that, I am also from 1st January 2022 supposed to pay 25% of the penalty imposed to go in appeal. In my view, it is little difficult to comply with this provision, because I won't see any case, particularly during my practice, that even though you are not paying any penalty, the goods are removed. I mean, they allow you to remove the goods. First, they ask you to pay the penalty. You have to pay it and provide the challan. They need to issue an order, and then only goods are allowed to be removed. But talking about the penalty to release the goods, earlier provision is having the defects, because let's say you are moving the goods today on 18th January, you are supposed to pay tax on that particular supply at the time of filing GSTR 3B. Your consignment gets caught. As per earlier provision, that is the provision effected up to 31st December 2021, you are supposed to pay tax as well as the penalty, which is 100% of the tax. Where owner comes for payment of penalty, you can see from this chart, when owner comes for payment of penalty and when the owner does not come for the payment of penalty, the provision what differ. But generally, the owner comes forward for the payment of the penalty, then he is supposed to pay 100% of the tax as well as 100% of penalty equivalent to tax. But when I file my GST return, for January 2022, I'm again required to pay tax. And to recover this tax and penalty, I do not have any other option except to go in appeal. Now, as per the revised provision, penalty, they removed the word tax. They replaced the penalty is equal to 200% of the tax. So the quantum of payment will remain the same, but the nature of the payment is changed from tax plus penalty to 200% of the penalty. But when the owner does not come forward for payment of the penalty, then as per the revised provision, earlier applicable tax needs to be paid plus penalty equal to 50% of the value of the goods needs to be paid. Obviously, the tax paid is given as adjustment. But now, as per the revised provision, you need to pay 50% of the value of the goods or 200% of the tax payable, whichever is higher. So the penalty component as per the revised provision to release my goods which are detained has increased. 129, which is the e-way bill provision, it gets amended with effect from 1st January 2022. It says that within 7 days of detaining or seizing of your goods or conveyance, notice will be served to you. And within 7 days of serving of the notice, they have to pass order under section 129 subsection 3, that how much penalty that you are supposed to pay in case your explanation is not satisfactory to them. Now, this is again draconian provision as me. Generally, up to 31st December 2021, there is a penal provision in case your goods gets detained or seized. But now it says that 129(6), it says that where the person transporting the goods or owner of the goods, either of the person, is not paying the penalty within 15 days from the serving of the order, as we have seen that 129(3) is the order. If you receive any order of revenue authority and you are not paying that penalty portion within 15 days, then either your goods as well as your conveyance can be sold or disposed of. So not only your goods, but the conveyance in which you are moving the goods can also be disposed of or sold by the revenue authority. Luckily, they have also provided one proviso wherein it says that the conveyance shall be released on payment of penalty or 1 lakh, whichever is less. Because definitely one can see that the value of the conveyance is much higher in case the value of the goods which is moving is not so much material. And these 15 days can be 15 days grace period to pay the penalty can also be reduced in case nature of the goods is perishable. Certain other updates as far as Aadhaar authentication is concerned, to assure the genuineness of the transaction, whenever you are filing application for revocation of cancellation of registration, authorized person who is mentioned therein, registration certificate, must be go through the mandatory Aadhaar authentication process. And similarly, in case of refund application, the same needs to be carried out. Basically, you need to do one menu online exercise where whenever you are going to a profile of particular SSC where the authorized person is having one link to send OTP on the registered mobile number, and that OTP you need to authenticate, and then only your refund will be released. Please note that generally for every refund, we are supposed to approach the authority. Only one refund, which is IGST paid on export of goods, is streamlined process because it is an integration of GST and custom. So whenever you are supplying the goods with payment of tax, the custom authority approves that yes, this kind of goods has been exported, and GST by way of GST return is approving the payment. So linking of GST and custom is a really automatic route for GST refund. But from 1st January 2022, in case you have not particularly not carried out this Aadhaar authentication for such kind of taxpayers, then you will not be able to claim refund. As I said that I have also covered certain earlier circulars, which I think that one should also consider while exercising any GST implication for export related transaction. One of the definition of intermediary, which is derived from service tax era, is debatable since day one. Why? Because of particularly place of supply provision. Because place of supply in case of an intermediary is the location of that particular intermediary itself. We will see one example that I am based at Gujarat. Identifying the prospective customer for my foreign client. That identification of customer may be in Gujarat, outside Gujarat, or maybe outside India. But I am supplying the service to my foreign client, which is not belongs to India, obviously. Whether service supplied by me is called export of service or not is the question. We have seen many cases where such kind of service are considered and classified as export of service by many of the clients. But it is not the correct one, because I am performing the role of intermediary. And for intermediary, the place of supply is the location of intermediary itself. So in my case, even though I am supplying the service to my foreign customer and identifying prospective customer for him anywhere in India or outside India, place of supply for my service will always remain my location. And one of the conditions to classify any service as export of service is that place of supply should be outside India, which is not the case in intermediary. So this is very debatable issue as far as the intermediary is concerned. So who are called intermediary is the underlying question since day one. To clarify the intermediary, they have issued a circular number 159 on 20th September. And crux behind that circular says that there should be minimum 3 parties. The supply is between particularly 2 parties other than me, that is intermediary, because that 2 party is doing the transaction of, let's say, sale purchase, but I am identifying them to reconnect these 2 particular party, and I am receiving my commission. So there must be a 3 person. One is supplier, one is recipient, and one is intermediary. there must be two distinct supply. It is very critical condition that I am supplying the service only to identify one particular customer. Another supply, which is the sale and purchase of the goods, is being carried out by the supplier and recipient. Whatever name called for my services, but the nature of the services provided by me must be of agent only, and I must not be engaged in the main supply. Main supply, that means the purchase and sales transaction is being carried out by another two party. And whenever there is a subcontracting of particular activity per se, that is not called intermediary. So circular clarifies that intermediary is supposed to perform only the role of agent, and main supply is being carried out by other two parties. So if you have any client who is dealing into such kind of transaction, then this circular might be helpful to you. We have also come across certain kind of cases where you are supplying the goods outside India, that is doing the export, but you forgot to obtain the LUT. So obviously you need to apply LUT as per particular provision. In case you are not supposed to pay tax and you are doing the export without payment of tax, then this circular might be helpful. That circular 37 says that delay in furnishing LUT in case may be condoned, and facility for export under LUT may be allowed on ex post facto basis, taking into account the facts and circumstances. One would say that I have done the export by following all the conditions except by obtaining the LUT. I have exported the goods, shipping bill has been filed, my goods have gone outside India, payment is received in foreign currency, but the procedural lapse that may happen by not filing LUT may be allowed as per the circular number 37. Whenever you are reviewing the GST perspective compliance of your client, you may come across the situation where client is having the cash ledger balance, but that remain unutilized, particularly for a head under minor head, that is interest or penalty. It may possible that your client might have deposited amount in interest and penalty instead of tax portion. Then one would see PMT 09, that is the facility has been provided to shift particular cash ledger from one minor head to major head or vice versa. When we are talking about the refund, I would say that generally the refund is eligible for the client who are engaged in export or who are having the inverted duty structure. Refund is as far as the excess cash balance or refund for section 77, that is the intra head or intra transaction, intra head supply, considering the interstate supply, is altogether a different thing. But generally the refund is being claimed for either inverted duty structure or export without payment of tax, where you have accumulated ITC. When you are calculating the refund calculation, you might come across the particular figure. I would just request you to also consider the earlier circular which we have just discussed, wherein facility has been provided in GST portal also to include GST refund of multiple months. So it may possible that if you are claiming GST refund for, let's say, only one particular quarter, then your refund amount is less. But when you are calculating the refund for let's say bigger period, then you might be having bigger amount of GST refund because of the domestic versus export turnover. So based on case to case basis, one would definitely file GST refund considering the period under consideration. Whenever you are filing GST refund, also consider circular 135, wherein the document has been prescribed that which document you need to furnish. That document you can furnish along with the refund, otherwise your refund will be liable for rejection. In case your refund is having any defects, then officer is providing the deficiency memo. It may possible that certain for particularly certain query, they may issue SOCOS notice as well. So whenever there is a deficiency memo, you need to file GST refund afresh. But whenever there is a SOCOS notice, you are just required to comply with that notice. You can submit your reply online, but you are not supposed to file your GST refund afresh. Only one point here to highlight, that in case you have complied with the SOCOS reply, but the officer is still not satisfied with the reply submitted by you, then he may reject the refund application. But whenever refund is rejected by way of a SOCOS notice, then for that particular month or that particular period, you are not eligible to claim refund again. So please take care of this provision. Similarly, as intermediary has been clarified, export of service has also been clarified by way of a circular 161. This circular says that if we go through the export of service definition, 5 conditions I need to fulfill to consider any service as export of service. First condition is that supplier of service should be located outside India. Sorry, inside India. Recipient should be located outside India. Place of supply, as we discussed, must be outside India, and payment for the such services must receive in foreign currency. Now, 5th condition, which says that the supplier and recipient are not merely an establishment of the distinct person in accordance with explanation 1 in section 8. So here the condition is that supplier and recipient should not be a merely establishment. Now doubts has been raised where the group company or sister concern is situated outside India, and that sister concern is a separate company formed and incorporated under foreign law. So whether that company and here Indian company are considered as mere establishment or not is the question. To clarify this, circular 161, this company is set up under the foreign law, is having the separate legal identity, and it is not a merely distinct person. Distinct person will be called when my branch only I am creating outside India. Then only that company will be considered as merely an establishment, and transaction between recipient and that branch of foreign is not considered as export of service. Similarly, one clarification has been passed when I consider particular transaction as intrastate supply, which subsequently held to be interstate supply. So I charge CGST and SGST, but I am supposed to charge IGST or vice versa. Then in that, refund is eligible under section 77. I need to pay the correct tax and claim refund of wrong tax paid. The notification 35 issued on 24th September 2021, it says that such kind of refund you can claim within expiry of the 2 years from the date of issue of this notification, that is notification 35. So in case you have come across any such situation and you have paid the wrong tax, then you have the time till 24th September 2023 to claim any such refund. One another changes from 1st January 2022 with respect to the restaurant service, which is supplied through ECO. So Swiggy and Zomato. Earlier, the restaurant is charging GST and paying to the government. Now the responsibility of collecting the tax and paying to the government has been shifted to that Swiggy and Zomato itself. TCS is obviously not required by ECO because ECO itself, electronic commerce operator ECO means, they are supposed to collect the tax and pay to the government. Even though the registered restaurant which is providing the service is unregistered, and also ECO is supposed to collect tax from the customer and pay to the government. Clarity has been circular has been clarified to clarify the point where under whose turnover, whether restaurant is obliged to consider the aggregate turnover under his supply, or ECO is aggregate turnover is considered in the aggregate turnover of ECO. It says that the aggregate turnover is considered in the ECO, and whatever tax has been collected by ECO from the customer cannot utilize the input tax credit. He must have to pay the tax in cash only. Now, one major amendment from 1st January 2022 as far as GSTR 3B is concerned is auto interest calculation. Earlier, we all are knowing that late fee is auto calculated. If we file our GSTR 3B belated, then in next GSTR 3B, late fee is auto calculated and we are supposed to pay the same, then only we can proceed further. Now, they have also provided the facility to calculate the interest as well. Here, two scenario under which the interest can be auto calculated by GSTR 3B, because we all know GSTR 3B is the summary return. So portal does not know that whatever liability is reported in GSTR 3B belongs to current tax period or previous tax period. So either taxpayer himself need to report tax liability period wise, that let's say if I am filing my January GSTR 3B, then I need to provide the breakup that out of 300 rupees that I am paying liability that I am declaring in January, how much portion belongs to December, how much portion belongs to November. The facility has been provided in GST portal. If you file your GSTR 3B for January, you will see that changes as well. Or in case you file your GSTR 3B belated, then also interest will be auto calculated. But important point here to note is that that interest is editable. So it is not like that auto interest calculated by the system. You must have to pay only and then only you can move further. You can very well edit the same and put your figure as per your calculation. But here important point to highlight is that you edit the auto calculated interest, you will be warned for the same and you might receive the notice which is auto populated notice by the system. Further, we all know the section 50 is already amended, which says that the interest will be calculated only on the portion which is paid by cash. Let's say I'm having rupees 100 liability I am discharging 80 rupees by ITC and 20 rupees by cash. So interest will be applicable only on 20 rupees. But here the circular, or let's say the instruction that is being passed on by GSTN, it says that for past period liability, whatever you are reporting by self-assessment basis that this much liability belongs to the previous period, on that liability, interest will be calculated on gross value, even if you discharge that liability through ITC. Those who are having import-export code as mandated by DGFT, you need to update the details in import-export code every year. Otherwise, your IC will be deactivated. Various reminders has been provided by DGFT to update the IC. Now, from 1st February 2022, if you have not updated your IC details, even though you do not have to update anything, still also you need to go there, online DGFT portal, and click this updated button by keeping the details same. If you do not do that before 31st January 2022, then from 1st February 22, your IC will be deactivated. So to remove this, so to sort out this issue, please update the DSV whosoever have not updated after 1st July 2020. That trade notice issued by DGFT also mentioned the IC, list of the IC which is not yet updated. So in case you are not sure, then you can go there and check whether your IC's number is reflected there. And in case, let's say your IC is deactivated, then you are not supposed to do any manual exercise. You can very well go to the DGFT portal and activate your IC online. That is real-time activation facilities also available. When we are discussing certain pronouncement by advanced ruling authority, I come across one advanced ruling authority which seems interesting. Emcure Pharmaceutical Limited, in case of Emcure Pharmaceutical Limited, pronounced by Maharashtra Advanced Ruling Authority. Generally, this kind of situation prevailing in every company. Every company is recovering certain portion from employee towards either canteen facility or bus facility or any other facility that is being provided to employee. Together with that, notice pay recovery is also obvious in majority of the company. This advanced ruling authority goes and check the scope of supply, and it says that supply definition includes the transaction carried out by the company during the course and furtherance of business. When you are recovering any amount for canteen facility or bus facility from employee, it is not connected to the functioning of the business, and it is not said that such kind of activity is carried out in course or furtherance of business, and hence it is not falling in the definition of supply, then GST is not applicable. Similarly, on notice pay also, they said that notice pay recovery is not something which is tolerating an act by employer of employee, and hence it is not a deemed supply, and on notice pay also GST is not leviable. However, we are having other jurisdiction advanced ruling authority pronouncement as well, wherein advanced ruling authority has pronounced that notice pay recovery is liable to GST. So as far as such kind of issue which are highly debatable, and routine course of business, such kind of issues are coming out day in and day out. I wish that CBIC should come out with the circular to clarify such kind of issue, to remove any litigation in future. There are approx 351 items for which the HSN code has been changed. With the introduction of a 7th edition of Harmonized System of 2022, India has also adopted the revised HSN. One would go to revised CETA, Custom Tariff Act, and see whether there is a change in HSN code or not. For your convenience, I have also parked such old HSN with new HSN in Excel file. You can very well filter that Excel file by putting your HSN in which your company is dealing in, and you can see whether there is any change in HSN or not. I will circulate with this presentation that Excel file as well.
Thank you very much for the file.
Yes, sir. I will share it.
Yeah.
Similarly, in many of the clients, you must have received DRC 01A, that is the intimation of the tax liability. Generally, whenever you are filing GSTR 9, that is the annual return, you are mentioning exempt supply. At the max, you might be having interest on FD that you are reporting as exempt supply. You might be having the MEIS license that you may report as exempt supply. You might be having the duty drawback. You might report as non-GST supply. The department now, before initiating the department audit itself, they are throwing the notices by mentioning that you need to reverse the input tax credit on this exempt supply or non-GST supply. And you have not done so, then kindly justify. Similarly, when we are logging to GST portal, we can see that there is a comparison between GSTR 3B and GSTR 2A. So any difference for particular per year, they are issuing the notice that you have claimed the excess input tax credit comparing the GSTR 2A, ignoring the fact that you might have claimed the GST input tax credit in GSTR 3B, which is yet to be claimed of last year or past period. But such kind of notices are being issued, and since these notices are already been issued in DRC 01A, you are supposed to reply with proper justification, else they may issue notices under this section. So for effective compliance in GST, as I said, that you might be having certain clients for which you want to review the GST health checkup. Then you can see that for outward supply per se, is there any income in the P&L credit side which is skipped, or you may not have paid the tax? Let's say if you are coming to a particular income, let's say rental income or certain other recovery, you need to justify whether that income is liable for GST or not. Similarly, when your client is dealing in multiple products and the nature of supply is such that there are group of product which is being supplied in the single invoice, then you need to check whether there is a composite supply or is there any chance of mixed supply. Otherwise, if that tantamount to the mixed supply, then the highest rate would be charged. You can very well check the rate charge on outward supply is constant, and whenever there is a rate change, as we have seen that from 1st October as well as 1st January, the rate has been changed for various products due changes has been implemented in accounting software or ERP or not. And as I said, whenever there is an exempt supply, you see the possibility of ITC reversal as well. And for accumulated input tax credit, if you have come across, you need to check whether is there any possibility to claim the refund. What is the reason behind the accumulation of input tax credit? You identify and foresee whether refund is eligible for to claim back this ITC or not. Whenever there is a cash balance, you can very well claim the refund, or you may transfer it to another head as we discussed earlier. Whenever there is a branch is eligible to claim input tax credit, we have Rule 28 proviso which says that valuation will not be any question as far as recipient is eligible to input tax credit. So you may plan your tax planning accordingly, that supply from one HO to branch or between the branch is at such a value that there won't be any accumulation input tax credit at one particular location. Whenever you are claiming input tax credit without payment of tax, in case of export, you are not allowed to claim capital goods input tax credit. However, the same condition is not applicable when you are doing the export with payment of tax. So you may opt for this route whenever it is convenient and whenever it is permissible. Similarly, whenever there is a inverted rated structure, then also you can very well check whether is there any possibility to claim input tax credit. However, after the Supreme Court decision, one thing is very clear, that input service and capital goods refunds are not eligible, but you can combine multiple period and see the eligibility of input tax credit as far as the inverted structure is concerned. Similarly, one would also check GSTR 2A and 2B to identify is there any input tax credit transaction which is not reported in your books of account. Then it may possible that you come across certain situation where, let's say, RCM has been auto-populated in GSTR 2A and 2B when you are doing the transaction with registered person. You might not have reported that transaction as RCM transaction, but by looking to your GSTR 2A, you will be identified such kind of transaction where GST liability may be arise. And similarly, now everything is auto-populated because everything is online. So before filing your GSTR 3B, please do check with auto-computed GSTR 3B, and if there is a major mismatch, please be ready with the justification and reconciliation. And whenever you are filing GSTR 3B belated, then interest calculation will be one thing that you should consider. And now interest is already auto-calculated. So at the end, whatever has been discussed is my view. There may be a multiple view because GST is that law which obviously having the different perspective. And at the last, sir, we can have a question answer.
मैंने सबको unmute कर दिया है. Anybody
Okay.
Anybody can unmute and have a discussion, can talk, can ask a question. मैंने सबको unmute कर दिया है. Before anybody can raise a question, anybody can start asking a question before we conclude. Thank you very much, Hiran, for a wonderful talk. It was a precise and concise. It is really nice to hear from you. And as you had been our 12th man in our office for GST work, I appreciate that. And GST is a very huge subject on its own. It's not easy. And once again, Hiran, really wonderful talk. You talked from a bottom of the experience, which anybody who is not a CA can understand what is the question is.
Thank you, sir.
So thank you very much for patience hearing. And once again, I ask everyone to join CISA, CSAM, CISSP, any course which can contribute to their profession. And I had done n number of courses because of that today, though I am not practicing any of the field, but it would help you in a big way. So I ask everyone to, I would give you books, I would give you material, I would guide you. And this presentation would be put on YouTube, and it would be used by, it can be shared. So with this, I think nobody has raised a question right now. So we would conclude here. And in spite of being a very vulnerable, Hiren still go on, and thanks for a wonderful talk. See you once again. Thanks. And we
Thank you, sir.
conclude here. Thank you.
sir.
Thank you. Thank you.